This is Nightly Business Report with Bill Griffith and Sue Herrera.
Pumping out profits. That's what corporate America is doing, and investors like it.
Farm aid. The Trump administration is giving billions of dollars in emergency money to America's heartland to ease the trade war pain.
Show me the money. But if you win the $500 million Mega Millions jackpot, there are a few things you need to do first. Those stories and more tonight on Nightly Business Report for Tuesday, July 24th.
And we do bid you good evening, everybody, and welcome. Investors so far like what they are seeing this earnings season. Profits are up, revenue is generally stronger than expected, so investor sentiment is high, and that's putting July on track to be the best month for the Dow and the S&P since January. Today, the industrial average rallied 197 points to 25,241. The Nasdaq fell a point after hitting a new intraday high earlier. The S&P added 13. But as companies report their quarterly results, they're also identifying some developing headwinds. Bob Pisani explains.
Earnings season is in full swing, and so far the numbers are still strong. Second quarter earnings are expected to jump more than 20%. Those are outstanding numbers. But the outlook is looking a little less rosy for a handful of companies. So there's three key headwinds in particular that are plaguing some reports: higher interest rates, a stronger dollar, and of course all this trade war uncertainty that's leading in some cases to higher costs. Illinois Toolworks, this is one example. They make industrial equipment like engineered fasteners. They cut full-year guidance. They talked about currency issues and inflationary challenges. Whirlpool, you all know them, big manufacturer of home appliances like refrigerators and washing machines. They suffered a big earnings miss, and they cut their full-year outlook, blaming, in part, stronger dollar, rising steel costs, as well as some weakness in Europe. The CEO, Mark Bitzer, said that the U.S. steel costs in particular have reached unexplainable levels. That's a quote. Whirlpool had originally been a big supporter of stricter trade controls for its own industry to combat competition from foreign rivals like LG and Samsung in the washing machine business. But now they're feeling the effects of higher input costs due to some of those tariffs. Consumer product giant Kimberly-Clark elsewhere lowered its full-year earnings outlook. They too cited weaker foreign currencies, stronger dollar, and significant inflation in raw materials like pulp, for example. Pulp is a key component in many of its tissue products. Harley-Davidson, this is another one. They posted 6 straight quarterly earnings beat, but they too warned about the potential impact of new European Union auto tariffs on their profit margins. And finally, Avery Dennison, they make labeling products, stationery kinds of things. They said they started rolling out price increases in every region in response to rising commodity costs, materials like paper and resins used for adhesives. As for tariffs, the company said the direct impact so far is modest, but it does paint a broader picture of macro uncertainty. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Nick Raish joins us now to talk more about corporate earnings and those potential headwinds that some companies and industries are facing. He is the CEO of the Earnings Scout. Welcome. Nice to have you with us, Nick.
Thanks for having me.
Bob Pisani talked a little bit about some of those headwinds, including the tariffs, but you make the point that basically the tariff issue is very company specific and that right now it's not affecting the economy and the market overall.
That's correct. They're industry specific. So the overall impact of tariffs right now to the overall economy is negligible. It's immaterial. But if you're in the crosshairs of a certain industry, and aluminum, steel, autos, the farmer, you're impacted greatly. So, but the overall impact right now, the net effect to the overall economy is not material at all to the overall S&P 500.
How many more quarters do we need to go before it becomes material? I mean, at this point, it somewhat feels like an excuse when they talk about tariffs, but if it goes on much longer, it won't be, right?
That's absolutely right. There are some companies that have been struggling before any announcement of a tariff that will use that as an excuse. This earnings season, we've seen a little bit of that because we measure the earnings trends and have measured them declining for 1 or 2 years. Again, before the tariffs. But yeah, if it escalates, if it becomes a material amount, then we'll have a problem. And the sell-side analysts on Wall Street are not factoring in escalation into their estimates right now. The price has been depressed this year. because what we have is fabulous earnings right now. And if it wasn't for the tariffs talk and the tensions, this would be probably a rip-roaring year for the market.
What about those currency issues, though? A number of companies are starting to cite the currency issue and inflationary costs, certainly. But it seems as though the currency for the multinationals really has become an issue.
It has for some, and we've seen that. Now, the overall aggregate impact will be about 2 or 3% negative hit to earnings this quarter, and we're going to have above 20% earnings growth. Take it to the bank, that's going to occur. So there is a little bit of a hit. But the strong dollar, if that does persist, on the multinationals, you'll see a bit of an issue. And when you look at a name like Whirlpool, it's not just the tariffs. They do a lot of business in emerging markets, such as Brazil. And if emerging markets suffer because of a rising dollar, companies that do business in there will suffer at the margin because the expectations need to be tempered for their businesses in emerging markets. So the dollar does play an impact and a role there in the expected profitability and why we see some of those companies struggle.
Thank you so much. Appreciate it. Nick Raish with the Earnings Scout.
Thank you.
By the way, the best performing stock in the Dow today was United Technologies following a strong earnings report and an upbeat outlook. It was one of the 3 widely held blue chips that released quarterly results today. The other 2 were 3M and Verizon. In fact, Dominic Chu wraps up their numbers for us now.
A trio of Dow components were among the earnings reports that kept traders and investors busy today. First up, United Technologies, the aerospace and building systems company, posted better than expected profits and sales. It also boosted its full-year profit forecast, thanks in part to better demand for parts and services for airlines. CEO Greg Hayes is also keeping a close eye on possible longer-term effects of trade and tariff policy.
We're actually not seeing the full impact in 18 of what the steel and aluminum tariffs are, and it's anybody's guess how long those stay in place. I think if you think about next year, obviously you could see a much bigger impact from all of these tariffs, plus potentially some higher steel and aluminum tariffs as well as copper input costs higher. So we've got a lot of work to do to try and offset that.
Fellow industrial company 3M was also a more positive story after the maker of everything from Scotch tape to knee braces to commercial filters also posted better than expected profits and sales. 3M benefited from strength across a broad range of products with sales growth in areas like safety and graphics as well as healthcare. But it did trim the upper end of its full-year profit outlook. The company also told analysts that it doesn't see a large impact on its bottom line from currently enacted tariffs, but is prepared if tariffs expand. And finally, there was Verizon. The telecom and internet media company had a beat on profits and sales, but the number of postpaid wireless customers it added missed some analyst expectations. Verizon also said it lost 37,000 Fios video subscribers last quarter, which is more than it lost in the same period last year. It did, however, add to the number of Fios internet customers. Now, it's just day 2 of the busiest earnings week of the season. Among the Dow components left to report this week, Boeing, Coca-Cola and Visa tomorrow, McDonald's and Intel on Thursday, and Chevron and ExxonMobil and Merck on Friday. For Nightly Business Report, I'm Dominic Chu.
Eli Lilly continued the positive earnings trend with a strong quarterly performance. The drug maker outpaced both profit and revenue estimates, which made it one of the best performing stocks in the S&P 500 today. Meg Terrell takes a look at what drove Lilly's results.
It was a better than expected second quarter for Eli Lilly, which also raised its full-year outlook based on the results. Helping to drive sales were medicines Trulicity and Humalog for diabetes, Alimta for cancer, and Cialis for men's health. The Indianapolis-based drug maker also said it doesn't intend to raise its prices for the rest of the year. That follows other pricing pledges from competitors Pfizer, Merck, and Novartis. The Trump administration laid out its blueprint to lower drug prices in early May.
Today, my administration is launching the most sweeping action in history to lower the price of prescription drugs for the American people.
And little changed until the president called Pfizer earlier this month, prompting the company to reverse planned price hikes. The rest of the industry has since started showing more restraint.
We have a volume-driven strategy. We have new medicines that can make a profound difference for patients. Our goal is to get those medicines to the patients. So that's what we're doing. Now, since the blueprint was announced, we have not changed any prices in the U.S. And as we're saying today, our guidance doesn't include any U.S. price changes either.
Lilly also said it plans to pursue an initial public offering for its animal health business. Called Elanco, short for Eli Lilly and Company, the business generated 13% of Lilly's revenue in 2017, or about $3 billion. Analysts largely applauded the move, noting the success of Pfizer's animal health spinout, Zoetis. That stock has almost tripled since it began trading separately from Pfizer 5 years ago. For Nightly Business Report, I'm Meg Terrell.
Time to take a look now at some of today's upgrades and downgrades. We begin tonight with Nucor, which was upgraded to overweight from sector weight at KeyBank Capital Markets. The analyst there cites the prospect for infrastructure spending. Price target $77. That stock rose more than 1% today to $67.82. Apple's price target was increased to $232 at Morgan Stanley ahead of that company's earnings report out next week. The analyst expects Apple to report growth in its service business, which is a big focus for investors right now. The rating remains overweight. The stock rose a fraction today to $193 even.
Morgan Stanley also hiked its price target on Alphabet to $13.25 following its earnings report last night. The analyst says Alphabet's quarterly results suggest there is still a lot more growth ahead. The rating remains overweight. The stock rose nearly 4% to $12.58.15. Coverage of EOG Resources was started with a buy rating over at Mizuho. The analyst calls EOG the apple of the oil industry. The price target is $173. The stock gained 2% to $125.62.
Still ahead, why the White House is sending billions of dollars in emergency aid to farmers.
The Department of Agriculture now plans to give $12 billion to farmers and ranchers hurt by tariffs imposed on U.S. products. It is short-term relief, but it could ease the blow of the trade fight. Kayla Tausche has the details.
Farmers are feeling the heat from the escalating trade war as U.S. tariffs are met with retaliation on America's heartland. In Missouri, President Trump said the end result will be better deals with trading partners.
Making tremendous progress. They're all coming. They don't want to have those tariffs put on them. They're all coming to see us. And the farmers will be the biggest beneficiary. Just be a little patient.
To buy that patience, the Department of Agriculture put together a $12 billion fund, temporary aid that will be paid directly to farmers whose crops like soybeans plummet in price and buying up surplus in other crops like fruits and nuts where markets dry up. USDA called it a short-term bridge to offset immediate financial stress from market disruption. But farm groups and Republican lawmakers didn't buy it.
Having talked to a bunch of soybean farmers over the weekend, I got the same refrain, which I'm sure you've heard a lot, which is we want trade, not aid.
Nebraska Senator Ben Sasse called the funds bailouts, saying this trade war is cutting the legs out from under farmers, and the White House's plan is to spend $12 billion on gold crutches. The American Soybean Association called for a longer-term plan that includes removing harmful tariffs.
There are still a lot of unanswered questions about exactly how the assistance will work and how long it will last. Officials say they'll work all of that out in the next few weeks, with the first payments expected to go out around Labor Day. For Nightly Business Report, I'm Kayla Tausche in Washington.
And word of that farm aid package helped lift shares of farm-related companies today, companies like Deere, Caterpillar, and AGCO, which in theory could benefit if farmers continue to spend more on tractors and other gear.
And the meat industry is also bracing for the effects of tariffs, which could add to the surplus that already exists around the country. Aditi Roy reports from San Francisco.
At Marina Meats in San Francisco, the butchers here say the prices they pay for beef and pork haven't changed much this year, despite the increasing supply of meat.
All of our farms are all local. They're from Sonoma County to everywhere in the proximity of 200 miles, so nothing's really going to affect us that much.
But some analysts say the rising amount of U.S. beef and pork sitting in cold storage could mean trouble ahead for farmers and meat companies. Meat that doesn't go to retailers, restaurants, or export markets end up in freezers. The latest USDA monthly numbers show total pounds of stored beef were up 8% year over year. Frozen pork is up slightly from last year. Analysts say the numbers are not record-setting, but big and foreboding.
We're definitely expecting inventories to continue to increase. We're expecting a huge increase in production this fall, record high.
The amount of meat in cold storage has been building in part because of low feed prices, which is a major cost for producers. But demand has also been on the rise, especially from export markets. Analysts say meat processors have increased production to fulfill the growing needs, but eventually ballooning supply outpaced demand. And now, with trade tariffs in place on some beef and pork exports to China and Mexico, some analysts say it's just a matter of time before the rising supply of frozen protein will eat into profits of meat companies.
As it stands today, you would expect prices to drop, especially for products that are impacted by the tariffs.
Price drops could hurt farmers, which is why today the Trump administration announced plans to offer up to $12 billion in aid to farmers hit by tariffs on their goods. Still, some predict consumers could be the big winners, especially if the tariffs stay in place through the year.
So you could see, for example, lower cost holiday hams, for example, this Thanksgiving and Christmas.
But the effects of tariffs take time, and some analysts say don't expect to see cheap meats at your supermarket anytime soon. For Nightly Business Report, I'm Aditi Roy, San Francisco.
Biogen raises its full-year earnings outlook, and that is where we begin tonight's Market Focus. After reporting a stronger than expected quarter driven by higher sales of its muscle disease treatment, the biotech company hiked its profit guidance for 2018. It said its revised forecast reflects its confidence in its product pipeline, especially its experimental Alzheimer's programs. Biogen finished up 4% today to $372.84. GlaxoSmithKline said its experimental two-drug treatment for HIV proved to be just as effective as treating the virus as the standard therapy made up of 3 drugs. As a result, Glaxo says it's planning to apply for approval of this new two-drug protocol this year. Shares were up a fraction to $41.21. Health insurer Centene said that strong membership growth in its exchanges for the Affordable Care Act helped overall results beat analysts' expectations. Centene said that it's optimistic about enrollment rates in 2019 as well, and said that it plans further expansion in those ACA markets. It's also raising its full-year outlook for revenue. Still, shares fell about 4.5% to $132, but we should point out it's been up more than 60% in the past year.
JetBlue's adjusted earnings came in better than expected, even as higher fuel costs ate into results. But revenue missed estimates, and the company warned it's planning to trim growth in the second half of 2018 as fuel costs surge. Shares fell 10% to $17.79. Also, after the bell, AT&T reported a faster than expected rise in new subscribers. That growth helped the company deliver a profit beat, but revenue did miss expectations. But the company is hiking its full-year earnings forecast. Investors focused on that revenue miss after hours, but they finished the regular day up 2% to $31.68.
House Republicans today unveiled a proposal calling for permanent tax cuts for individuals and small business owners. The plan expands savings plans like 529s for college savings and some retirement accounts, and establishes tax breaks for startup companies as well. This broad framework so far is being dubbed Tax Reform 2.0.
Senator Warren said if she could, she would like to see the already passed Republican tax cuts rolled back. And she explained why in an interview with John Harwood.
Here's how I look at budgets, and taxes are at the heart of this. A lot of people think they're just numbers. They're not. They are the expression of our values. The values of the Republican Party that passed those tax cuts are to give $1.5 trillion away to the richest Americans and the biggest corporations and let everybody else pick up the crumbs. And I don't think that's the right way to think about it.
What's too high for the top personal rate?
It's not about a number. That's what negotiations are all about. It's that
50% obviously too high?
Look, there was a time in a very prosperous America, an America that was growing a middle class, an America in which working families were doing better generation after generation after generation, where the top marginal rate was well above 50%.
It's 90%.
That's exactly right. But for me, the heart of the question is that you've got to ask, what constitutes a fair share in this economy?
Right.
And look, it depends in part on what the economy is. It also
But it
depends.
doesn't strike you as obviously, no, 90%, that's ridiculous, can't be that.
No, look, 90%, yes, 90% sounds pretty shockingly high.
Yeah.
But what I'm trying to get at is this is not about negotiating over specific numbers.
Senator Warren also told John that she believes in markets and functioning economies, but only fair markets and markets with rules.
Ivanka Trump announced today that she is shutting down her fashion brand. The president's daughter and White House advisor said that she was making the move so she can focus more on her work in Washington, D.C. But she has also reportedly been frustrated by restrictions aimed at avoiding conflicts of interest. Some department stores like Nordstrom and Hudson Bay have also dropped her line because of poor sales. The company currently has 18 employees.
Coming up, if you hit the Mega Millions jackpot, there are a few things you need to do first. Pepperidge Farm has recalled 4 different kinds of goldfish crackers over concerns of possible salmonella contamination. The problem could be connected to whey powder, used as seasoning in 4 different flavors. No illnesses have been reported, and no other Pepperidge Farm products in the U.S. are subject to that recall. But this follows a similar step taken by Mondelez and Kellogg's over some types of Ritz crackers and Honey Smacks cereals.
A new report shows a sharp decline in home sales in Southern California. According to CoreLogic, sales of both new and existing homes and condos dropped by nearly 12% compared to a year ago, but prices rose to record levels. In fact, the median price paid for all Southern California homes sold in June hit a record $536,000. One reason why this report is being closely watched is because California in the past has been a predictor for the rest of the country.
Well, the Mega Millions jackpot stands at $500 million. That is the 5th largest prize in the game's history. The drawing is tonight, but I hate to tell you this, the odds of winning are slim at 1 in 302 million. But that's not stopping people from buying tickets and dreaming about hitting it big.
512 million, that's a big amount of money. I can do a lot with that. Me and the kids buy a house.
If I win, hasta la vista, baby. I'm out of here.
So what's the first thing you should do if you do hit the jackpot? I should say when you hit the jackpot.
Exactly.
Eric Honest is the president of Titus Wealth Management. He joined some tips. You know, the first thing I always heard when you win a jackpot or get some sort of a windfall, first thing to do, nothing, right?
Yeah, Bill. Well, first thing you want to do is stay calm. Second thing you want to do is sign that ticket, first and foremost. You want to make sure you put your name on the back of that ticket, fill it out, make sure it's yours and it's your own. So the third is probably to stay quiet, just to your inner circle for that immediate time period. Not to run out and buy a bunch of houses and cars and that kind of thing.
Right. And I would assume that time where you stay calm would also give you the chance to put together a team, right? If you win that amount of money, you're gonna need some help.
Oh, absolutely. You're definitely going to need a team of advisors, and this is where you really want to vet people out to make sure they're trusted advisors, licensed advisors, and make sure they're really the right person for you that's going to help you for this long legacy of wealth transfer that you have that's going to happen.
The big debate always is, do you take the lump sum up front or do you take the annuity over the number of years? What's the criterion for you?
Great question, Bill. Yeah, so from a personal control standpoint, some people might say to take the payments over a period of time. If you do a calculation and come back at it, you're probably better off taking the lump sum from that perspective, but it does depend on you and your thoughts and goals. And remember, if you do take the payments, they're for 30 years. So that lump sum could grow at a much larger rate over a period of time and could leave the next generation with significantly more.
Yeah, and a lot of people that we have heard of in the past that win large lottery awards, they end up either spending it or frittering it away or not setting up the right kind of trusts so that other parts of the family or generations later still have some of that wealth.
Sue, I've seen it firsthand. I've seen people buying relatives and cousins cars and not so much houses, but cars and trucks and the like. And I've seen 12, 15 million squandered away. So it can happen. It happens over time, and all of a sudden you wake up one day and say, what did I do? So it's so important to have a team of trusted advisors that have been through this and understand the situation you're in. While it may seem so overwhelming that this amount of wealth that you have, you just look at some of the celebrities over the period of time that have gone through large amounts of money.
Did you buy a ticket?
I do. I did. I bought a ticket on my way here, Bill.
Very good. Good luck. Eric Annis with Titus Wealth Management joining us tonight.
If he's not available again, we'll know why.
Yes.
He won. All right, before we go, let's take a final look at the day on Wall Street. The Dow rallied 197 points to 25,241. The Nasdaq fell 1 point after hitting a new intraday high, and the S&P 500 added 13. I got my ticket, you got your ticket.
And even if we win, we'll be here tomorrow.
We'll be here tomorrow.
Yes.
We hope you win. That's the Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Good luck.
Good luck.
See you tomorrow.